Gold and silver prices have just hit new record highs, with silver touching 1 lakh rupee per kg. Now, we've discussed about gold before, but today let's focus on what's driving silver's value. First, silver is often thought of as the little brother to gold, but it's more than just a precious metal for jewelry or investment. Now, silver has a unique role because of its industrial uses. Now, you'll find it in electronics, solar panels, electric vehicles, and even healthcare. So unlike gold, which is mostly bought as an investment or for jewelry, silver is both an investment and a vital industrial commodity. Now first, the basic thing to know is silver is an asset which inherently does not yield any interest or income and is purely driven by the economic forces of demand and supply. This means that when there is high demand and there's not enough silver available, the prices go up. On the other hand, if demand falls or there's plenty of silver available, the prices can drop. Now, coming to the current factors that are driving the prices of silver. Now, one of the main factors driving silver prices is its demand in industries. Silver is essential for making solar panels and EVs, and as the world moves towards green energy, the demand is skyrocketing. In fact, it is estimated that by 2027, solar energy might use 20% of the world's silver supply, and this could rise even more by 2050. Now, the next generation of electric vehicles will also rely heavily on silver for battery technology, giving it a strong advantage. Now, like gold, silver is also a safe asset. Whenever there is uncertainty, whether it's a war, political tension, or an economic slowdown, people rush to assets that will hold their value. Now, this happened during the Russia-Ukraine war, and we're seeing it again with tensions in other parts of the world, like the ongoing conflicts between the Israel and Hamas. Now, silver, along with gold, is one of those go-to options for people trying to protect their money. Now, silver is also more susceptible to supply constraints than gold. Silver mines are often a byproduct of other mining activities such as copper or zinc mining. This means that silver production is not easily scaled up to meet rising demand. Now, during the COVID-19 pandemic, we saw how disruptions to mining led to a significant drop in silver supply, while demand remained relatively high. Now, silver supply will likely continue to face constraints, especially as the demand for renewable energy, electric vehicles, and healthcare products grows. In fact, silver demand exceeded silver supply for the third consecutive year in 2023, and the supply-demand imbalance for silver could push its prices further. Now, when interest rates drop, silver becomes more attractive since it does not pay interest but can appreciate in value. Now, central banks like the US Federal Reserve have been cutting interest rates and are expected to cut more to help support their economies. Plus, with inflation still being a concern, investors are turning to silver as a hedge against it. Now, India is a major player in the silver market. It is the largest consumer of silver, and with the government pushing for renewable energy like solar panels, the demand for silver is surging. On top of that, more disposable income and higher demand for silver jewelry in India are adding even more pressure on the already tight supply. Now, looking ahead, the factors supporting silver prices are not temporary. Industrial demand is only going to increase with the push for renewable energy, EVs and healthcare technology. Geopolitical uncertainties and inflation fears will continue to drive silver, while low interest rates make silver more attractive compared to traditional investments. And with countries like India increasing their silver consumption, it's hard to see how the metal's price won't continue to rise. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.